All right, guys, we are back with another update. Bitcoin has continued the crash back down to $56,000, getting very close to our 50% level here. So good things look like they are coming, but I want to get through some of the risks of buying now, trading this crash, and potentially buying the exact low. I've also got some strong altcoins to look at and how you can spot these for yourself. A little bit on XRP too. And of course, the interest rate announcements that we just saw in the last 24 hours. What does this mean to the market? And are we going to see further pauses? Are we going to see cuts, which the probabilities have swung to, or some hikes? So plenty to get through in today's video. It's your home of macro cycle analysis. Thanks again for supporting the no-nonsense titles and thumbnails. None of this big warning stuff. I still need your help. Smash up the likes. 4,000 in today's video, and hopefully this continues on in the journey that we're going towards, I don't know, 400,000 subscribers. But first, the interest rate announcements come out. They're on pause. I don't think that comes as a surprise today. However, what does come as a surprise is how quickly the masses and this tool in particular has swung back to cuts in some of the upcoming meetings. So what we know from reviewing this over the last several months, and the theory of mine has been that we would see rates remain on pause. Meanwhile, for 2023, everyone thought it was going to be cuts. So we're looking at the blue circle here, and these are your interest rates at the top. If we reflect back to the beginning of the year, it was like this. They thought they were going to be at roughly 4.75 to 5% by this stage. And of course, we're still at 5.5%. And it looked like it was going to be cuts throughout the entirety of 2024. Now, from this pause, we've seen interest rates now swing back to look at a cut in November, whereas 2 days ago, it was going to be a pause in November. So one thing we've learned is that the further out you look, the more incorrect this probability chart is. We've remained with the idea that it's going to be paused, which could then lead to higher prices in the stock markets. Yes, higher interest rates and higher prices because of where we sit in the cycle. This has been the view for many, many, many months now. You don't need the interest rates to be cut to get those higher prices, and I think the stock market has adjusted to that. That's essentially what this thing was written up here in January. That's what I was looking at months and months ago. Now, it's not that difficult to get this right. You just have to avoid the mainstream media and avoid, I don't know, 99% of the junk that's on YouTube and Twitter. I'm no smarter than you. It's just about removing that noise, removing that distraction, and seeing how these things play out time and time again. It's the same old jargon. Someone calling for a massive collapse over and over again. The Fed's going to break something, etc., etc. It's the same BS every single time. So in terms of the interest rates, I still think we've got a couple of pauses left here. The only chance that I think we would get a cut is if we started to see the masses swing to the right, which would mean a rise. And you'd start to see some extra columns brought in here, and you'd see interest rate hikes. So I think when the market believes that is the case, then maybe we see another pause or two, or we actually start to see some cuts. So that's going to be what we continue to follow up with. That's what's happened with the interest rates. Now, these are some of the notes that we've been going through for coming up to 2 months now. The 3-day down signal has been a big one for Bitcoin and that crash, which I'll get to in just a moment. But there was another rule that we could add to this over the last couple of weeks. We saw 3 weeks down for the S&P and for the NASDAQ, and I think it was on Bitcoin too, but essentially 3 red weeks, I should say, not just 3 weeks down, but 3 red weeks. Red, red, red. All this implies is that there is a higher chance, not a guarantee, but a higher chance that we would see a rally and then another test to the downside. So this correction might not be over yet, but typically you'd see at least another check. So a check of this low, maybe go a little bit lower. And by that stage, we start to climb out of the correction and start to work our way higher, which also lines up with the election year seasonal pattern. So if we drag this thing forward, probably somewhere down the vicinity of here, this is April, and May has obviously bounced back a little bit. So that's what it would look like right now. Essentially just looking at the grind that the stock market, in this case S&P 500, sees during an election year. And then once you get to about June, you start to grind out of it. So May typically shows a low. You can see on the red line here and the blue line and the black line, you'd see some sort of bottom forming, which is potentially next week or the week after. So sort of that first half of May, and then it starts to climb out of that low. Not a new fresh high, but it climbs out of that low. So we might not see those new fresh highs till quarter 3 of 2024. And then of course that leads into the election, which also has another period of a correction. So that's what we're seeing with the stock markets, which is going to also affect Bitcoin and that downside that we've currently seen. So if we continue to see further downside here, that might put more pressure on BTC to also continue down. You can see we've had that rejection dead on the 50% level. That's why it's so important to master this 50% level and understand how to use it to your advantage, short-term, long-term. It just happens time and time again, rejected off that 50% level. And now we're coming back to test the next 50%. To the downside, I wouldn't be getting too worried about this correction unless it started to break down and close below 4,700 points for the S&P 500. Seen a couple of calls for this thing to boom and collapse this year. It's still not looking likely at this stage. The same deal for the NASDAQ, just needs a bit more time to cool off here. Probably going to go through the similar sort of pattern to the S&P. We've seen the 3 red weeks, the rally from those 3 red weeks, and now we're coming back to test those lower prices yet again. You can see the signal back here, 3 red weeks, a rally, came back down. I've gone through this several times before. You've got another 3 red weeks, a rally, come back and test, didn't get that low, and then it continued on. 3 red weeks, rally, and a test. So it's not a guarantee. It's just looking at the probabilities. That's typical to what the market will do after such a significant move to the downside. One quick note about any sort of recessions or collapses in 2024, the UK market has hit another new all-time high. Yesterday had a down day, but the day before, new all-time high, day before that, new all-time high, another new all-time high, all-time high, all-time high, all-time high. Remember, the UK was also in a technical recession. So just as a reminder, if you're new into the financial space or, you've been around for 12 months, 24 months, and you've never really seen a recession, these sort of technical recessions don't really matter to the market. I know some people get a little bit triggered about that, but what you are trading is the chart. You're not trading the recession or some crazy guy that's been in the market for 50 years telling you the market's going to collapse. Just follow the chart. Follow the chart and you'll be okay. So moving on to Bitcoin and crypto. That's my little rant for the day. Hopefully it's helped you out. If you do see some sort of recessions, just follow the chart. Looking at the fear and greed index now for Bitcoin and cryptos, we want to get onto some of those strong cryptos as well. Today's bar of roughly $4,000, testing $56,000 for the first time since, late February, is dead on that 50% level. Now, this might be the call that gets the fear and greed index back into the fearful zone. Not sure about the extreme fear zone, but probably, I think, somewhere in the fearful zone. You're going to know this. We might even know it by the end of this video if it takes me too long to record it. But essentially something like that after going from greed to neutral might in fact get it back into fear. I have heard the calls that some people are questioning the fear and greed index now because it's been greedy for so long while Bitcoin had basically been trading sideways. Let's give it a little more time to see whether there is a problem with the reading itself, like with how the data is collected and this result produced, before we basically throw the baby out with the bathwater. I should know that one. I'm going to have my second baby next week. Obviously, my wife is going to have the second baby next week. Moving on. These are the huge signals that came up in mid-March. 3 red days here, 3 red triangles, which mean there was less chance that Bitcoin was going to run up to a new all-time high sooner rather than later, based on probabilities of the entire history of Bitcoin and the entire history that this rule has been tested on other markets. That's the beauty about this particular rule. So far, we find ourselves down from the top 48 days. We're going to be 49 days by the time this ticks over, and I dare say it's going to at least get past the 60 days before we reach a new all-time high. So this is on par with some of the other previous corrections, and we have seen the largest correction to the downside now, 23.4%. So in the intro, I talked about this, trading this crash, risks of buying now and buying the exact low. Let's squash this one straight up. No one, I hope, is trying to buy the exact low. If you have a target of $50,000 and that is the lowest price you think it's going to go, set your orders at 52 or 53. Maybe set a little bit at 56. The idea is to have a pyramid style entry where you would put the most in at these lower prices, a little bit in here, or sort of a medium amount, and then a little less and a little less again. That, I think, is one of the easiest strategies to implement for anyone, whether you're new or existing to crypto or even investing in general, and you have no idea how to enter these markets. Personally, it's not about waiting for that low tick, that exact low tick, trying to buy that exact low tick and then going all in at that low tick. I know it always sounds like that on X or Twitter or YouTube. Everyone thinks they're buying the lowest tick possible. In reality, it never works out like that. So have a strategy for a drop here at 23%, maybe a strategy if it gets to 30%, maybe another strategy if it gets to 40% down. There's all the possibilities here because no one knows exactly what's going to happen on this black side of the chart. So keep it in mind as we continue forward. So far, Bitcoin has done pretty well what we have been anticipating in terms of time and price. We weren't expecting major high prices. I did look at the possibility of a $78,000 or $80,000 push if this was going to have a final push, but it never got there and it failed, which means, well, that was invalidated. And now to the downside, we're looking at the 50% level, which essentially it's only a couple of $100 off now, 56.5K, and the 50% was at 56, nearly 200. So that's hit the 50%, probably not a bad area for risk reward for entering the market, even if it goes lower. And if it does go lower, we can have a look at the percentages here. From that low price to the next resistance level of roughly 53,000 that I had put in one of these titles a few weeks back. You guys might have remembered that 30% crash, 53K crash after halving. That would take us about 6% down from that low. Personally, I'm not trying to catch the exact low price in any move. I'm just looking out for areas that the market could come back and test. And if it doesn't, well, at least I've got my plan in place to get in a little bit higher, even if it's not the exact price that I wanted. So buying the exact low, let's get rid of that. The risks of buying now, well, we've kind of covered that here, where the risk to the downside is possible 6% to the next support level. The next one after that, roughly around that 48, 49K, which was the peak for the ETF announcement when everyone else was hyped up like this thing was going to go bananas. And also the monthly swing top back in March of 2022. This was the lower swing top, the complacency bounce before the collapse. That is your level there. That's about a 14% move away. And for good measure, let's do the entire range of this current bull market. It's 50% through the middle, which is $44,600. That's about a 20% move away from that low. From the current price, maybe you're watching this now, 23%. So roughly around 20% from the low down to that 44. I'm not saying it's going to get there. I don't think it's going to get there, but what do I know? I'm just looking at what's happening or what the possibilities are for the black side of the chart and then layering accordingly. If I think there is even a 1% chance that it's going to get to 44, then how about I set up my pyramid like this and say if it gets down there, if it gets below 50K, then I'm just going to throw everything I've got into the market. If it only gets to say, 51 to 53K, well, then I'll throw, 60% of what I've got in. If this is the low here and it only ranges between sort of 56 and 59, then maybe I'll just throw sort of 30, 40, 50% in that I have. And if we don't go back under those levels again, the market comes back and just trades between 60 and 70K now for the next couple of months, well, then I'll just chip in the remainder of my stash on the side through this period. And I've talked about the length of these periods with how long I think it's going to be underneath the old all-time high. We're coming up to 2 months. Well, it's 50 days, so about another 10 more days and we'll be at 2 months underneath this old all-time high. I suspect to be underneath the current all-time high of 74,000. It's going to be at least I don't know, 3 months thereabouts. We'll be 2 months down. If it takes a month to get out of it, I think that'll be a pretty quick going. But that's the quickest case, I think, somewhere around that 2 to 3 months, and then probably looking more like a 4 to 6 months based on what we have seen in the past when we had these signals here of the 3 days down. The halving was there, super big hype, 6 green months up. It was just bananas going up here. So I think that needs to cool off, and it might take maybe sort of half that time to I don't know, 100% of that time. You got 6 months up, so let's give it around 3 to 6 months until we get back to those tops. So that's Bitcoin, the risks there, trading the crash, buying the exact low. That leads us on to a couple of quick reviews of the USDT dominance. We're seeing the market bounce up, which of course means Bitcoin and cryptos have gone down. We're looking for some sort of resistance, some rejection here of the USDT dominance, which could lead to more money coming back into Bitcoin and cryptos. So far, it's come to the first point here, roughly 5.5%. We can look all the way up to roughly around 6.5%. The total cryptocurrency market cap has also continued down, but hasn't put in a new low yet, which is what we've seen in the past. You see that low bounce and then the higher lows start to form. Continue following up here. I'd be concerned with this if it broke under $400 billion, meaning that altcoins could spend a lot longer grinding out sideways, which is very important to note when you're looking for the strong cryptocurrencies, because that could just mean you got to wait in these things a lot longer, or they could fail and start to break underneath previous resistance, support, which was resistance, which would then become resistance yet again. So I've shown this before, FET or fetch.ai, strong chart pattern. This is broken above the previous resistance throughout 2020 and 2021, 2022, 2023, and this is on the Bitcoin chart. So it's got to do a lot more work to break higher on the Bitcoin chart than the USD chart. So that's why I like to look at these as opposed to only the USD charts. And this looks like a relatively strong pattern still, while it remains above roughly around sort of 2,000 Satoshis to about 2,600 Satoshis. So anything down to about this level, still relatively good for the bull market, still relatively strong. If you see your altcoins breaking down from those lows that it had formed, you can see a lot of nice higher lows here. That is going to be a weak altcoin. So FET at the moment is still in a strong position. Yeah, I said it like a retard, I know. Solana, still in a relatively strong position. Yesterday, it had a pretty decent move up against its BT. Oh, so this is a USD chart. It also had a decent move up on its BTC chart. You can see here it's bounced back 134, still underneath the major 50% at 138. But Sol BTC also had a pretty good move there. And overall for this move, it's still above the 50%, and it moved against BTC. So it went higher against its BTC value when BTC was falling. Put in a higher low, and I've talked about that before. Some strong altcoins are finding higher lows at the moment. This is what I want to see. So that's Solana. Before I get to another one here, we've got Render also sitting above the higher lows here, the 50% levels. Doesn't mean it can't break down, and if it did, I'll be watching for somewhere around sort of 800 Satoshis. You can see that's where it had some resistance before, so keep watching out for that. Again, this is on the Bitcoin chart. So you're looking for even stronger altcoins than the garbage that you just see in USD. That's 3 of them so far. And here's one for you. XRP. No way am I saying to buy any of these whatsoever. I'm not giving any financial advice. I'm just looking at charts. Every time I've hated on XRP, basically, it keeps going down, 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 down. Those that are in the XRP movement, they sort of see one bar up and they're all excited, and then basically just keeps going down. But when you zoom out, it's an absolute piece of garbage. However, this has probably been one of the first times that XRP has shown any sort of sign of strength, anything whatsoever. Crash down, higher lows, and then the breakout. Okay, it's broken past the crash that it had in April, and take XRP off the chart. Doesn't matter. Forget this crap, forget the price, forget the name. Just look at the chart pattern. That is much better now. The last times I've been hating on it was all of this stuff here. This is all garbage. That chart pattern looks like shit. Whether it was my favorite altcoin or Bitcoin or whatever, that chart pattern looks like crap, and I wouldn't want to be getting into it. This very, very, very short term looks relatively good compared to anything that it has done in like the last several years. I mean, all of this is just basically faded out anyway, so I don't have high hopes for it. Maybe a short-term thing here. I've spent a lot of time on XRP because at the end of the day, it's a chart pattern. I don't care about the crypto. It's so hyped up out there, it's ridiculous, and it just sucks a lot of newbies in. So in no way, shape, or form am I telling anyone to go out and buy this thing. I'm just looking at the chart pattern and giving, what is it, dues where dues are due? I don't know. Anyway, you get the idea. Just looking at chart patterns. Use that knowledge, take it across, put it into any other charts you think look strong. Go back to any of the others there that we've looked at over the course of our time here on YouTube together. And with that said, stay tuned. Like, let's go for 4,000 for the no nonsense titles and thumbnails. And I'll see you guys back here at the next video. If for some reason the baby comes early and I'm not online, that would be the reason why. So make sure you are subscribed to my X. That's going to be in the link in the description down below. And join us at TIA Premium. Link to that is also in the video description. And you can find that in the link up here too, tiacrypto.com. I'll see you guys at the next video. Until then, take care and peace out.